Hi friends, Jim Small here again. Thought I'd take a second and just give you another blog on profitability. One of the biggest questions I get from people across the industry is, how do I know which clients are making me money and which ones aren't? Over time we've developed a systematized process for this, and let me walk through it for you. At the end of following this process, what you'll be able to do is have a very detailed list from the most profitable client in your business to the least profitable client. Here's just a few tips. The most important factor you need to do is have an accounting system. You can be on a QuickBooks or a simple basic system. It can be anything that you can just make sure your records are kept very meticulously just by a simple bookkeeper. This may only cost you a few $100s a month. Once you know that, and you can now have revenue by client, so you know how much a specific client pays in management fees and other ancillary items. Make resale packets or reimburse expenses, all kinds of things that client pays. That's in your accounting system. That's step one. Step two is to make sure all your employees are tracking their time that they're spending on each account. This is time they're doing any activity. It can be communicating with board members, talking with homeowners, inspecting the property. Whatever they're doing related to a specific association, they've got to track that time. We typically do it in increments of 15 minutes. That's typical what we recommend for most people. So step two is tracking everyone's time. Once you've tracked that, you can actually calculate, based on the salaries of those employees, how much cost you have in labor. So if the cost is 10 hours for someone who makes $10 an hour, that's $100 cost in that month related to that client. By taking the revenue in step one and subtracting the actual expense from the time tracking in step two, you'll be able to calculate your profit by client. Some really progressive companies I know will actually prune or get rid of the clients that make them the least money. Surprisingly, when a lot of companies do this the first time, there's several clients that are actually losing you money. That means you're doing work for them and they are costing you money. It's like you're giving them money out of your own wallet. It's crazy, but unless you have the data from step one and step two, you're never really going to know. Try implementing these to make more money. You'll probably end up working a lot less as well. And come down and enjoy the Caribbean with me, my friends. Have a great day. I'll talk to you soon.